Technology is very big for Equity Group because, as we said, we needed to adopt a high-volume, low-margin model. And you can only do that by moving away from brick-and-mortar fixed-cost structures to variable cost structures and being online, such that customers reach you through clicks on their devices. And that helps to break the barriers of geography and time. You compress both, and you are able to offer banking 24 hours wherever the customer is. Now, to be able to do that, we needed to invest heavily on fourth industrial technologies, and broadly, that requires massive investment. Today, we signed an agreement with HP to provide us with infrastructural capability, both for processing and storage, up to $200 million, up to 2030. So that is the level of innovations. Today, we also unveiled a partnership with Microsoft and MasterCard Corporation. And if you look at there, the issue is rollout at solution for small-scale farmers.
How have you been able to scale where others have failed?
We have scaled because of commitment. As an African banking group, we felt we have to provide solutions to the excluded in the financial sectors. We build a purpose that centers on changing lives, giving dignity and expanding opportunities. When you talk about expanding opportunities in the African continent, your target should be the 1.3 billion people. So even at 20%, at 20 million, we are still tiny to the aspiration and objective of being providing us solutions. And we use technology extensively. 98% of all our transactions are now on digital platforms, and that has really made it scalable. And that speaks to the point where today we were with Microsoft, we were with HP, because we need to leapfrog on technology. We need to be globally competitive. We need to be efficient. And so if we could be the first adopters for the industrial technology, because we have no legacy systems, then we can be globally competitive.
Since you focus a lot more on technology, how about the issue of AI? Everybody is talking about how AI can revolutionize that industry, the banking industry, how AI can either create jobs or take away jobs. How do you see AI playing a role in the banking sector?
We start with the digitization. The most important thing is digital inclusion because AI is layered on top of digitized systems. Then we use machine learning to collect and gather all the data. And with that data lakes that we build from all these digital systems, then we start studying the behavior of people, the needs of the people. So we do deep analysis, then feed artificial intelligence in decision making. The insights that will be built from analysis of big data will help them to create generative AI, which is central then to decision making. I don't really believe that AI will replace jobs. What it will do is that it will create jobs of the future. It's a tool of enablement. It's like what people feared, that computers will kill jobs. Computers only increased jobs and change the quality of the jobs that we were doing, from manual jobs to intellectual jobs. Again, AI takes that to the next level of using human intelligence to develop solutions that AI can provide the insights. Success is how many lives are changed in the African continent, how many people are able to live dignified lives, and that is by expanding opportunities for them. So for me, success is expanded opportunity for the people. They can feed their families, they can provide for their children, they can afford health. That is what success looks like. Banking is just a tool of achieving that greater objective.
How many markets are you in?
We're in 7 markets. We're in DRC, we're in Uganda, we're in Rwanda, we're in Tanzania, we're in South Sudan, we're in Kenya, and Ethiopia. And broadly, we're a systemic bank in all the markets. We're either between number 1 and number 4.
Dr. Mwangi, thank you so much for your time.
Thank you for having me.